Good Monday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show on the post Super Bowl Monday, which is like somewhat of a holiday for a lot of people. Not in Philadelphia today. It's like a funeral in Philadelphia today, right? So,
yeah, it's going to be it was sad yesterday. It's a very sad day. Everybody was pumped up. I live in Center City, Philadelphia, so the enthusiasm in the morning was incredible. I mean, people were walking on the street, doing the Eagles chant, their lines to the bars. Everybody was wearing green so a lot of excitement built up right before the game. And it was pretty, it was pretty
the air was let out of a big balloon. That's for sure.
Yeah, definitely.
I mean, I had to drive down to AC on Saturday, and when we left, it was night and all of AC was lit up in green. We had to drive through Philadelphia to get home to Bucks County, and Philly everything was green. All the skyscrapers. It was awesome. But
yeah,
a lot of I mean, it really, and the way it ended was exactly how the Cincinnati fans feel, right? I mean, it was ended on basically it was probably a penalty. I can't argue that it wasn't a defensive holding penalty, but
that ended the game. Yeah.
Tough way to end the Super Bowl, right? Not the other team doesn't even have a shot. So whatever.
Yeah. No, very tough.
Fortunately, I don't bleed Eagles green, though. I was rooting for the Eagles. It was a letdown for those Eagles fans for sure.
Yeah, for sure. Definitely.
Well, you want to start with the disclaimer?
Yep. So good morning, everyone. And before we get started, we want to say that Will and I at Market Chameleon, we're not a registered investment advisor, and we're not a broker dealer. We're not telling you what to do or just sharing ideas. If you need advice, call your registered investment advisor or broker. That's what they're there for, to help give you guidance, give you advice. There's the disclaimer.
Excellent. Before we get started, a little reminder: we have Felix Frey on tonight. He's giving us an explosive trade idea. That's his title. So it should be interesting. I'll put that in the chat. And tomorrow you have a webinar with Interactive Brokers, and that's done through Interactive Brokers. So you have to go to the Interactive Brokers site to register. I'll put the link also in the chat for that. And what's the topic?
Yep. So Iron Condor. So once a month we do a webinar with Interactive Brokers. They host the webinar. Tomorrow, 2 p.m. Eastern, we're going to be doing it on Iron Condors. It's not going to be on YouTube like these videos where we host them ourselves. You have to register with Interactive Brokers, and that will be at 2 p.m. tomorrow. And I think if you register, they do put those videos on their website, so you can come back and watch it later. But that's going to be tomorrow, 2 p.m. live. So if you want to tune in, ask questions live, and usually when we do that webinar, we do look at actual examples during the day of an Iron Condor, kind of walk through it. So that's coming up tomorrow. Tonight, Felix Frey will be doing a webinar with you, Will. And what time is that?
That's at 7.
At 7 o'clock. All right. So let's get started. Let me share my screen first. And if any one of you is joining us for the first time, the reason we do this show in the morning is to answer any questions you may have about Market Chameleon tools, data analytics. If you want to come on a show and discuss maybe something unusual you've seen or a strategy, you're welcome to come on a show, ask the question, and it will benefit the rest of the community. One way is you can type in the question on the live chat on YouTube. Will's watching and he'll read it back to me. If you want to come on a show and ask your question live, we'll also provide a link to Zoom. So you can click on that link. That takes you over to Zoom. Once you're in Zoom, there's a button, raise your hand. Click on that. Once we let you in, you could ask your question live and direct. You don't have to turn on your video camera, but everybody will be able to hear you. And this way you can navigate as to what you're looking at, and we'll try to answer the question that way. While we're waiting for questions to come in, what I'll do is go over the pre-market report, see things that are trading in pre-market hours, see if we could get some insights. If we don't get any questions coming in, I'll navigate to a report on some other report on the website, see if we could get some market insights. Okay. So pre-market report, these are stocks trading in the pre-market hours. We have a list of our most active stocks, our biggest percentage gainers and biggest percentage decliners. Coming down here, and I see 52 stocks made our percentage gainers list, 37 on the decliners. From this perspective, looks like we're setting up for a bullish bias at the open. If you do look at this list, you'll see a lot of small cap stocks. It could be ETFs, leverage products, closed-end funds, preferreds, anything that is listed on the major U.S. exchanges. And if it's trading in the pre-market hours and it meets our threshold conditions, it could make this list. And what we want to do is narrow down the list to a certain group of stocks to get a little bit better insights. And what I'm going to do is narrow down this group to S&P 500 companies. And to do that, we could use the filters above here. See this one in ETF. I'm going to drop it down. You get a list of ETFs to choose from. SPY, that's the S&P 500 ETF. The first one on the list. When you press on this, the list below will get filtered by stocks that are holdings in the ETF. Okay. And here we see that, which are the S&P 500 constituents. Here we see 4 stocks made our percentage gainers list, 5 on the decliners. So, I mean, I would say it's kind of even from that perspective, neutral opening. And I believe tomorrow we're getting the CPI number. Well,
we are inflation numbers
tomorrow. That will be big. The market right now very focused on that. What the Fed may do next is inflation, coming down. And if it's coming down substantially, maybe then the Fed will start to go on hold. If not, then we got more interest rate increases ahead of us. And I think right now, there's really a big debate going on if people betting on Wall Street are too enthusiastic about inflation, because the caution will be maybe getting inflation down from 8.5% to 6 or 5 or 4 may be a little bit easier than getting it from like 4 to 2, right? So that might be harder. And if that's harder, we might see higher interest rates for a more sustained period of time. And it'll be interesting because we haven't been in this environment where for a long time, right? It's been a long time for that the Fed needed to fight inflation. It's usually been so far they've been, a lot of times it was deflation, right? That they needed tools to battle deflation, or inflated asset bubbles. So we did have the internet bubble, we had the housing bubble, a lot of froth, but this inflation is, spread all over the world right now. It's not just the US problem, it's a real problem, and the problem is global. And for a long time the Fed hasn't had that issue. So all these tools they're using and so forth, we don't know the effectiveness of them yet, how effective that they will be taming down the inflation on the long term. Another thing kind of I wanted to bring up before we move on is that we get different types of customers asking different questions. So more, the seasoned traders with experience and knowledge usually, really know what they're doing and know kind of what they're looking for, know how to do evaluations of tools themselves. And that's part of, I think, being a trader, is that you're able to do good evaluation of tools and analytics and data. And then, but of course, a lot of people can find us on the internet, and sometimes I'll get questions like, well, the evaluation of whatever tool or analytic, and I'm sure you're doing that all over the internet, is looking at something that you want to benchmark or statistic to be correct 100% of the time, right? Or 90% of the time. That you're going to find something, and then you're doing one thing consistently over and over and over and over again, but it's always right. And that, shows that, there's a lack of maybe understanding of, risks and probabilities and financial models. Because the financial models, you're always, as a trader, you're always tweaking them, and you're using the tools to help you along the way in your trading, okay, in your own trading, because you're going to create your own portfolios, you're going to have your own risks, you're going to have your own outlooks, and there's lots of factors that go into trading, and the tools really help you. So somebody who's sitting there and trying to find something that, oh, I'm going to just track it because it's 100%, it's going to be 100% accurate all the time, forecasting uncertainty, that's kind of like a, you got to go back and start, I think, learning more about risk and financial models. All right, that's not a realistic way to evaluate. So I was going to give you an example that's an interesting, because right now we play.
Yeah, no, we look forward to that example. We did have a question which is interesting from Laurent.
Yeah,
he's saying right now, and I mean, it may be in a retirement account, it may be in his overall position. He's saying, I'm long the market at the money. Does it make sense to buy a couple 1 day to expiration S&P puts tonight and close them out tomorrow if no big move happens? So I guess basically, how would you analyze the SPY to see how the puts are priced? If there's any maybe volatility value, or just looking at hedging a long market exposure just for 1 day to expiration. Lawrence looking at.
Okay. I mean, we could take a look at SPY and just look at the puts if that's one, 1 day to expiration. But so I'll give you an example of a lot of people, maybe if you don't know, do you ever hear of the Jeff Yass? And I only know he owns TikTok. Yeah. Well, Jeff Yass, Jeff Yass is the owner of Susquehanna, right? He's kind of the name behind Susquehanna, which is an options market making firm, and really built his empire a lot of it through the options markets. He was here, I think, started out in Philadelphia, actually. And Susquehanna really employs some of the smartest, best, brightest minds out there, technology. So really, basically, a lot of people probably heard of Citadel, very close to, Citadel, Ken Griffin, Jeff. But
he's literally the opposite of Ken Griffin, though. He's like the guy he's literally the guy you never hear of.
Right.
You never hear of Jeff Yass buying, the most expensive real estate in Manhattan, or he lives probably in the same house he's lived in 30 years out on the main line somewhere. He's not buying, you just don't hear about it, right?
Right. You don't hear about him as much in the news. You'd have to really be close to the industry to hear about him, right? So if you're very close to the industry and you know what's going on with the exchanges and rulemaking stuff, then you would know more about him. But yeah, in the general public, you don't hear about him as much. And why I bring this up is probably because of the Super Bowl, and and I try to read about what's going on with people in the industry. But when and his fortune, it's made from creating good probability bets, right? Managing that risk and tweaking your models. And does that mean that he's 100% correct? No, there's nobody like that. Nobody has a model that could be 100% correct. But trading isn't about being 100% correct. That's never that being 100% correct is never a realistic assumption, to do that. Just like it wouldn't be realistic to say, if I'm going to play basketball, I'm in there to hit every single shot that I ever make 100% and block every single shot somebody else makes. It's very unrealistic. But I'll just give you an example, how, and I'm going to go here. So this is Jeff Yass, Pennsylvania's richest man. Okay. He's jetting 100 people to the Super Bowl, betting on the Eagles. Now, of course, he's local to Philadelphia, so I'm sure he's an Eagles fan, probably a big fan of, Philly sports. And he not only applies his mathematics and odds and data to just options. Really, I think he even started out betting on what horse races will.
Horses, the trifecta. He found
horses, maybe poker, and now even on sports, right? So sports, just like stocks, options, you're betting on some uncertainty into the future, some event, but there's an uncertain outcome in the future. And, here you go. He's building sports betting empire. And this article was before the Super Bowl, right? And he did all these mathematics, right? And was very confident in the mathematics, and he's smart. I'm just pointing out that, but you'll see what I mean. And he ran this. You could go read this article. It's in the Philadelphia Inquirer, right? And they're talking about, he's a professional odds maker whose firm Susquehanna weighs and revises probabilities. Bets on stocks, options, commodity contracts, securities, right? This is what they do. This is what they're the best at, okay? But when you do that, there's not only a model trying to get it right, but how to manage it, and you're going to be wrong a lot of times. So this is his opinion before the Super Bowl. This is a quote, Jeff Yass. The math guys don't get it. This will be a game of destiny, and we are gonna crush it, meaning the Eagles. I guarantee a win 28-10. So that's his math. So, and that's a strong statement. I guarantee a 28-10 win, which is basically, I'm sure he's following some probability and odds. And I think he did bet on this game. I think that he used these statistics to bet on the game. And obviously, what not only was there a loss, but you could see how far off, right, his model was from the actual result. And so somebody who just read this and probably looked at it and then looked at the actual result would say, well, okay, then he doesn't know what he's talking about. His models don't work, and there's no point to listen to him. But what they're not paying, what you wouldn't be paying attention is like what's not interesting behind that is like the results are always unknown, right? We always don't know the future. If we did, there's no point building a model even. We just all know what's the outcome. It's that, well, how did he arrive at it? What were the inputs, and how do you go tweak it going forward? Because it still could have been a very solid and good probability model to continue to follow, even though this particular outcome didn't work out. And just wanted to kind of point that out because this is a probability bet that I'm sure he made one of the best, odds makers out there, in my opinion, one of the best out, Jeff Yaz is probably one of the best odds maker that I could think of out there, even, you could say Citadel is very good, but Citadel is a little bit better at market structure. They know how to look at market structure and really capitalize on market structure, with their pipelines and their dark pools and stuff. Here we have
pipelines. You mean data feeds into the exchanges and processing the data is in the
data feeds, and controlling order flow from the retail brokers down to the exchanges and so forth. So very good at using technology and market structure to really capitalize on the markets. Also, they're very good at model. I mean, not to take away, they're very good at that too. Creating odds, building predictive models, building trading models, and so forth. But
yeah, they're trying to make lots of good bets because a certain percent of them are going to go against them, right? And they're trying not to ever carry way too much risk.
Exactly. And if you looked at their at their models and so forth, even though you're going to get some of these that were like, okay, the actual outcome wasn't close, you're talking about that you're going to get it wrong. The expectations are already that, you're not going to be perfect. You're going to have to tweak your models. You're going to have to create new inputs and so forth to correct them. Or sometimes it's just the nature of the game that you're going to get it wrong, right? The outcome could be way off from what you were anticipating because there's lots of other factors coming into play. But just found it interesting because he gave those odds. He's pretty secretive usually, right? But I think that the Super Bowl got him excited, and
and you're flying 100 of your employees to. I think there's over 2,000 who work at Susquehanna. They had a lottery, I guess, early in the year when they start off 5-0.
Yeah.
A little bit of a reward. He had a lottery to, fly, 200 of the employees out. So it hit the news. So we might as well, add.
He might as well talk. Yeah,
comment.
Exactly.
Yeah.
Right.
And it promotes his business, right? They own a sports book operation in Europe. And, like you're saying,
they own us.
They're pretty much making markets in the sporting world as well.
They're making market in the sporting world. I think in the crypto space, they were also maybe involved. Yeah. And I'm not taking away. I think that he's brilliant. The people at Susquehanna are very smart. We worked on the floor of the exchange, standing next to Susquehanna people, and we already know that there's no magic to getting something 100% right or anything and even though you run odds, you're like, okay, well, that didn't work out as I was anticipating. But that doesn't mean that you throw up your hands and you leave and you're like, this doesn't work. It just means, okay, let me take a look at the model again. Where do I tweak it? How do I improve it? How do I distribute my bets? How do I disperse my bets? Maybe this one around, I stay away from certain situations, or I have to compensate for certain things, that I didn't understand before. So, just because it's the Super Bowl, I thought it was very interesting, and look, I have a bias towards the Eagles, so I was thinking I'm like, well, I think they're going to win, and if Jeff Yas thinks they're going to win, and it's going to be a blowout, maybe I should bet on the Eagles myself. I didn't, because I just wanted them to win, and I thought betting on them might be, a jinx. So I didn't want to, just in case I didn't want to do a double win, but still wanted to show you guys that and introduce. If you haven't heard about Jeff Yas, really, you should read about him. There were books, very interesting. It's a very good it's a good firm. There are other interviews, and you want to kind of, familiarize yourself with people in the industry that are big players, and kind of they share their stories sometimes with you. So it's a way to learn from people. Anyway, I guess I talked for 9.
Yeah, we got about 4 minutes left. Any chance you can look at quick S&P puts?
Yeah, I mean, I don't know. Look, as far as SPY goes, and if you do have a portfolio that you want to hedge downside risk because you think, hey, there's an event coming up, and if like the CPI, and I got long exposure and I want to hedge some of that exposure off, whatever number you want to hedge off, 20% of that exposure, 50% or 100%, you want whatever you want to hedge off. And if it's a portfolio of diversified stocks that have a high correlation to the market, then one of the quickest ways to do that is an SPY put, right? SPY put spread. You could do different structures in SPY to hedge off some of that risk. And there's no one right answer. That's where the trader experience comes in, and you're going to learn from experience. So I can't give you an exact answer, because a lot of factors go into what your portfolio is, and, what your expectations are, and, what do you want to, if, you want to hedge downside risk, but, how much are you willing to pay for that? Because you could always just reduce your risk too, in some ways. Or do you want to hedge off your risk because you think that, hey, to the upside, I still want to gain to the upside, but I want to hedge off some of my downside. And what am I willing to pay for that? How much am I going to, because you're, when you're hedging, there's a cost, right? There's a cost to hedging. How much do you want to pay to hedge your downside risk by buying puts? I can't give you an answer what to do, but it's going to be every person. That's your, as a trader, that's kind of decisions you have to start making is, what is my risk? How much of it do I hold on? How much do I just want to hedge for one day? Because if you're in the opinion that you still want to hold on to your risk, but you just want to hedge off one day's worth of an event, right? Yeah, you could look at the 1 day option to, 0 DTE tomorrow or whatever, and see where these options are at that time. And if it's a reasonable premium for you to hedge off that risk.
Yeah, you could also, if you want, search for the best trade idea by edge and see if that's something that works for you. Just hold it for a day. I mean, you can do a lot of different things, right?
Yeah, exactly. There's no one right answer, because there's so many different ways to structure it based on the different, outlooks you have, what you're holding, what you're anticipating, to happen going forward based on the CPI and the interest rates. So there's lots of different things to look at. But once you kind of have an idea, then you look at statistically, this is what I'm trying to hedge off, that I think there's a X probability of the market going down 10% if this happens. And, how do I hedge off a 10%, risk, for this amount, what will it cost me? Is it reasonable, or should I just reduce my risk? These are decisions you really start to get experience you have to make over time, and through experience, you're going to probably try different things and see what works best for you.
Well, it does look, I'm looking at this chart over your shoulder, the summary of the IV. It looks like the vols may be in a little bit right now. Is that true?
Well, the vols
Look
are,
at
yeah, the vols right now are, yeah, they're, you know, as the market has been rallying, the vols have come down a lot. The implied volatilities have come down a lot. So on a relative basis, it's cheaper to hedge, right? But what you could hedge with put spreads, you could hedge with, you could do it with even butterflies, you know, or iron condors, or, you know, double bear spreads. You could do custom made, you know, multi-leg strategies, based on, you know, your outlooks. So
all right.
that's what I'm saying.
We're a minute into the opening. That was awesome, D. Thanks so much,
Okay.
my friend.
All right, guys. Thanks everyone for joining. Stay safe out there. Have a great trading day. We hope to see you guys tomorrow.
Trade in Peace Chameleons, and tonight with Felix Frey.
Yep.
Remember to register. I did put the link in the chat. You can come tonight at 7 p.m. That's on our YouTube channel, and tomorrow with D on IBKR's channel.